This is BankCents, the podcast that makes sense of all things banking. If there's something you don't understand about banking or finances, you're not alone. Our industry experts are bringing you informative and enjoyable conversations that break down bank jargon and dive into hot-button financial topics. And now, BOS, a community bank located across Illinois and Missouri, presents BankCents. Here's your host, Gregory Marantz.
Welcome back to the BankCents podcast, the podcast that makes sense of all things banking. I'm your host, Greg Marantz, Senior Vice President here at the Bank of Springfield, and I'm very excited today to bring you our final part of our three-part series on financial planning. Greg Pettis is our guest today, Vice President of Advanced Markets here at the Bank of Springfield, and today we're going to be diving into financial planning in your 40s.
Yes.
So if you've had the chance to listen to our first two episodes, financial planning in your 20s and your 30s, hopefully that will give you a foundation to what we're going to talk about today of financial planning in your 40s.
Yes.
I'm excited to dive into our first topic because you've actually written a book on this.
Yeah.
And I'll let you tell our listeners about the book, but it's about blended families and, those next steps or things that might happen in your life when you're in your 40s.
It is. And by the time you're in your 40s or 50s, unfortunately, there's a second or third marriage in about a third of Americans. So, yes, we wrote a book with an attorney here in town and a licensed marriage family counselor, Ron Deal. And the book is the Smart Step Family Guide to Financial Planning. His children, her children, our children. What did we mean when we said I do?
Sure.
So in your 40s, let's say you have a business and you're now in your second marriage. Who's going to inherit the business? And did you already promise it to the children of your previous marriage? What about college education? What is your partner's philosophy? What has he or she told their children about college funding? Maybe different from what I told my children. So there's a lot of issues. Just throw out child support, see what happens.
Mm-hmm.
So there's a lot we can talk about. There is no cookie cutter formula for a blended family. And Greg, for every issue that's above the surface in this, let's say iceberg analogy, for every issue we talk about financially that might be easy for a traditional couple, there's a lot of emotions under the surface because of the previous marriages, in the blended family, you really want to be open to conversations about, well, I call them emotionally laden issues.
Sure.
Like child support, like college funding, or like the business or inheritances or ex-spouses and who's going to fill out the FAFSA form for the college funding.
Mm-hmm.
So it's important that you have what we call a togetherness agreement.
Sure.
Where you actually sit down and talk about those things that are really deep in your heart about the prior relationship and how you want it to be different this time and why. And we actually recommend that you go to an attorney and have things put in writing, drafted. So often, prenuptial agreements are a part of the blended family planning, but they don't have to be so cruel, where sign here, that means you're not going to get the inheritance that I received from my father.
Sure. Instead,
we recommend that you really put into writing, why are my children from the previous marriage going to receive that inheritance? And what I will do for you and your children is put a trust together with some life insurance or something like that.
Mm-hmm.
And, so having, a positive flair to a prenuptial agreement is in one of our chapters of our books called the Togetherness Agreement.
Okay. Mm-hmm. Yeah. And I definitely strongly encourage our listeners to look that up on Amazon and see if you can find the book. If you find yourself in that situation, I think it's a good guide to give you tips. And I think one of the resounding themes that you've heard through all three parts of the series is don't be afraid to have that conversation. It's all these conversations when it comes to finances are very difficult. And they can be very tough to have. But the first step is trying to have those conversations. That's right. Because it is incredibly important to talk about it and plan for the future.
And maybe incorporate them into a regular, quarterly date night. Tonight we're going to talk about finances, and make it something that you do, make it fun, a date night. Yeah. But Greg, whether or not the couples are in the blended family or traditional family, or whether it's a non-traditional, union, it's so important that you review all the beneficiary designations that you have.
Okay.
I don't know how many people we've helped with their plans. They find out there's an ex-spouse on the beneficiary line. Mm-hmm. That could be a disaster.
Yeah. And when you're referring about those beneficiaries too, you're talking about if, you have a 401k out there, making sure that's updated. Mm-hmm. And hopefully you have a secondary beneficiary on there too.
Yes.
If you have your spouse as your first or your children as your second or vice versa.
Yes. So life insurance, annuities, IRAs, 401ks, anything where you had to list a name go back and check those. Make sure that they really dovetail with your will. You know, you could have a will that says, I hereby bequeath all of my assets to my spouse. But if you've listed other people on the beneficiary lines, those beneficiary designations override the will.
Yeah.
And so, you know, there could be, you know, like I said, a disaster. You want to go back and check all that, make sure it really works together.
Yeah. And I think that's one thing that's very important. We've seen a lot of our customers come in that might have, you know, they have a will established, but they didn't change their beneficiary on a 401k or a pension plan or something like that. So making sure you're reviewing that, you know, annually or semi-annually to make sure it's updated.
Life changes,
you want it to be.
Births, marriages, divorce, you know, all those things. You want to make sure that it's always updated.
Yeah, that's one thing I made sure that I did on my 401k. We just had our second daughter 6 months ago.
Congrats.
I made sure we added her as a beneficiary on there because I wanted to make sure it was as updated as possible.
And, you know, we touched on this, Greg, but it really is good that we bring this back to the 40-year-olds. Along with your beneficiary designation review, go back and review those old documents, your wills, your trusts, powers of attorney, and guardianships for your children. You know, the person that you designated when you were in your 20s for your children may not be willing or able to be the guardian now, 20 years later, or, you know, 15 years later. So you always want to keep that up to date, because not to have a guardian listed for your minor children could be one of the most disastrous decisions you've made. The state of Illinois will appoint a court-appointed conservator, maybe someone that raises those children completely different than you would like.
How often would you recommend, you know, you review your will, your power of attorneys, all those statements?
Reasonably every 5 years.
Okay.
I think the 5 is adequate. 3, if there's a lot of tax changes, if there's a lot of, you know, environment changes in the financial planning environment. Yeah.
And I think that's one thing that's really important to understand too, is that this financial plan, whatever your financial plan looks like or is, it's a living, breathing thing. It's going to continue to change throughout the course of your life. So you got to be ready to adjust when you need to adjust. And when, you know, life throws you those curveballs or whatever might happen.
Exactly.
Or if you inherit money or anything like that, that you're planning for that and taking that into consideration as you move forward. In your life.
Here, when we talk about financial planning, it's not just investment planning. I mean, it's easy, well, relatively easy, to take a rate of return, put it on an asset allocation, and properly send it out into the future, and then map that with a pie chart every 6 to 12 months. That's relatively easy. What's not easy is life planning.
Yeah.
So we offer both here at the bank. We offer investment planning, but we also offer, through our department, a holistic, comprehensive written plan that has nothing to do with product. It has to do with strategies and techniques. And then we refer out the actual implementation of the plan to your attorney, to the CPA, to the investment advisor.
Yeah. You know, the final topic I wanted to address today, and it's obviously not the most heartwarming topic to talk about, but it's, you know, those other things that might happen to you as you get older. You might have aging parents or other things that might occur. I kind of want to dive into that and how you can plan for that.
Well, you know, maybe not in your 40s, but at some point in that, you know, last third of life, our parents are aging. And statistics show that 70% of couples over 65, one of them will spend an average of 3 years in a long-term care facility. And when you think about it today, Greg, around here, it's about $100,000 a year for a skilled nursing facility, more like 65 or 68 if it's just assisted living. But for skilled care, we're looking at close to 100 a year today. And that the rate of inflation on long-term care is over 6%.
Yeah. Wow.
So, I mean, that could double every 15 years. Point being, not just planning for yourselves as you age, but also planning for your parents so that you don't get squeezed in that sandwich generation, having children that you're educating and parents that you're trying to help in their final third of life. And so you want to have a plan and look at long-term care. There's been a lot of developments around that strategy to where you might be able to actually couple your need for life insurance or their need for life insurance with protection against long-term care in one product. They call it hybrid now.
Wow. Very interesting.
You know, someone is going to get these hundreds of thousands of dollars in the family, whether it's through long-term care or death. Someone's going to get it instead of just throwing it down, you know, writing premiums and throwing it down and hope that you don't use it. And if you don't use it, you lose it. That's the old traditional long-term care paradigm.
And talk to me about this other item, this Boomerang Children. What does that mean? Does that mean my daughter's going to move back in with me after they move out once?
It depends. If, you throw that boomerang, it might come back, So not every child we launch is going to have a quick, steady career. There's so many obstacles nowadays. It's harder than ever I think, to see 20-year-olds launch now.
Yeah, and I think that's what you're seeing in a lot of statistics too is, a kid might get out of college and they decide, they want to live at home for a few years and save up money for their financial plan.
It's not a negative thing. It's hard to go out and buy a house with student debt.
Yeah.
More and more children with student debt say, hey, Mom, Dad, can I rent, at a low rate, can I rent from you, get on my feet, save up a down payment? And the answer should be yes for a lot of kids. But the question is how long will they stay? And then what are the agreed upon parameters when they're there?
Yeah. And,
as far as, all that would be rent and food, transportation and insurance, and who's going to pay for what. That would be a good part of a plan if you have children that boomerang back.
Yeah. And I think that's just another example of just having that conversation. Don't be afraid to have that difficult conversation. Yeah. There's professionals out there such as yourself that are, willing to help with that conversation too, and help establish that plan and bring up these topics and talk about it in a very thoughtful way.
Yeah.
And I think that's the first step is don't be afraid, to ask for help.
We welcome people of all ages to sit down, and what we'll promise is that we'll be good listeners, and we will not there'll be no judgment about your circumstances, and we'll be looking at options, not products. We'll look at options. What are the pros and cons of plan A? What are the pros and cons of plan B? And we'll help map that out for you, no matter what age bracket that you're in.
Yeah, that's great. Greg, I really appreciate you coming on. We might have to look into doing maybe another fourth part to the series and about, planning your 50s and 60s and 70s and so on and so forth.
Glad to. Yeah.
I do briefly just want to go over, hopefully everyone's had time to listen to our previous two podcasts on financial planning in your 20s and financial planning in your 30s. But just to give you a brief recap of those podcasts, financial planning in your 20s, we really talked about that, the initial plan, the conversation, that you're going to have with your spouse and where you want your future to be and what your priority listing is.
Right.
And then we jumped into, financial planning in your 30s. And I think we focused on that episode a lot on the educational side and planning for education for your kids' future.
As well as other goals.
Yeah. Yeah. And the other goals. And I think you can see in all these episodes, the theme is, recognizing what your goals are and what your spouse's goals are and, using that to help establish your financial plan.
Because they're constantly changing. How we felt 10 or 20 years ago is different now.
Yeah. Yeah. And then obviously in today's episode, we, kind of brought it all back and wrapped it up. And we talked about some curveballs that might happen in life.
Blended family.
Because as we all know, life will throw you curveballs when you least expect it.
Sure.
And so the best you can prepare for it and have a plan for those, tough things that might happen to you, the better off you'll be in the long run.
Yes.
So we really appreciate you coming on today. Is there anything else you'd like to add to our listeners?
I think we said this at the 20s, but there's so much. It seems like there's a plethora of options. Sometimes you get overwhelmed. Don't be overwhelmed. Take one step, knock one of those out. You'll feel better about yourself. It'll give you more energy to continue your journey.
Yeah. And don't be afraid to, reach out to whatever financial professional you use. If that's Greg or if it's somewhere else at another institution, reach out to them, help them help you get started on your financial plan.
Yes.
And if you have the chance, Google and look out for Greg's book. It might help you with some tips and tricks of, financial planning, especially in a blended family environment.
So. Yes.
So once again, I really appreciate you coming on these last three episodes, It's been an absolute pleasure. And I think we've really been able to impart a lot of wisdom on our listeners, and hopefully our listeners have been able to take away a couple items from each of the episodes that they can apply to their lives. That's our whole goal with the podcast, is to educate, and hopefully that results in, our listeners and our customers being more successful in the future as well.
That's great.
So thanks for listening to the BankCents podcast. Until next time.
Is there something about banking that doesn't make sense to you? Submit your questions to us on Instagram Messenger or by email, bankcents@bankwithbos.com. Or if you're watching this on YouTube, comment below. We're happy to give you our 2 cents on a wide range of topics. Thank you for listening on Spotify, YouTube, or wherever you get your podcasts. And please leave us a 5-star rating and review so we can continue to bring you more educational content. Thank you for listening, and we hope you join us on the next episode of BankCents.